Hello and welcome to the National Conference of State Legislatures video briefing on asset building. This video is made possible by a grant from the Charles Stewart Mott Foundation. Thank you for your support. My name is Mary Fairchild and I am a program director at NCSL where I manage the Opportunities for Working Families project. The project provides information and services to state legislatures about policies to promote economic success for low and middle income families. Imagine trying to survive a financial crisis without any backup savings or investment. The subject of today's presentation focuses on ways that public policy can help families build up their assets. The format will include my opening and closing remarks and a presentation from our guest speaker, Heather McCulloch. Her presentation will take about 15 minutes. Heather has made this presentation several times at NCSL meetings where she consistently receives high marks from state lawmakers and legislative staff. So let's get to the presentation. It is my pleasure to introduce Heather McCulloch. Heather?
Hello, I'm Heather McCulloch, founder of Asset Building Strategies, a consulting firm in California focused on advancing policies and strategies to enable low-wealth families to build financial assets. I'm very honored to have been invited by NCSL to talk about ways that state legislators can help working families increase their economic security by saving, investing, and preserving financial assets. To give you a sense of my background, for the past decade, I've been working with local, state, and national leaders to advance policies and strategies that expand savings and investment opportunities for low-income families. I've helped start several state asset policy initiatives in California and Hawaii. I've authored numerous publications on the topic, and I've also served as faculty to NCSL several times over the past 5 years. So I'd like to just start by asking, what are assets and why do they matter? When I'm talking about assets in my presentation today, I'm referring to cash savings, stocks, bonds, home, business, and real estate equity. As you know, income is critical to enabling families to get by day to day, but assets help them to build their long-term economic security. They help families to weather financial crises, to invest in their children and their communities, to plan for a secure retirement, and to pass resources on to future generations. We know that even before the recent economic crisis, millions of American families were experiencing a significant degree of economic insecurity, and things have really gotten worse. According to the most recent data, 1 out of every 4 households was asset poor. That means that their income, if their income were disrupted, they would only have enough savings to live at the poverty level for 3 months. And 2 out of 5 of America's children is being raised in an asset-poor household, including 1 out of every 2 Latino and African American children and 1 out of 4 white children. And asset ownership today is heavily concentrated. According to the Federal Reserve, the wealthiest 20% of families now own 84% of the nation's household wealth, while the bottom 60% own less than 5%. Asset poverty poses unique public policy challenges. We have a long history of asset building policies in this country that have incentivized families to build financial assets. In the past, the Homestead Act and the GI Bill both helped to build a strong middle class. And more recently, tax code-based incentives have encouraged families to save and invest in home ownership, education, and a secure retirement. While these policies have been effective, they haven't been accessible to everyone. For example, if a family can't afford to buy a home, they can't access the benefits of the home mortgage tax deduction. If they work in low-wage jobs without benefits, they can't access employer-based retirement savings and health insurance plans. And if they have limited income and little or no tax liability, they can't access the full benefits of tax deductions or credits unless they're refundable. And at the same time that our state and national policies have encouraged wealthier families to save, asset limits in public benefit programs, which are caps on the level of savings a family can have before they access public benefits, actually force families to spend down education and retirement savings to be eligible for temporary public assistance. Over the last decade, a national asset building movement has been growing in response to these challenges. It's based on the premise that asset building policies work, but they need to be more accessible. In communities across the country, public, private, and nonprofit sector leaders are coming together to expand the continuum of opportunities for working families to move from poverty to long-term economic security, from dependence on government programs and services to a level of economic self-sufficiency that enables them to build their savings and access investment opportunities. And in recent years, a new asset policy dialogue has been underway in states across the country. The discussion is being led by state legislators, governors, and asset building advocates who are coming together to learn about the causes and effects of asset poverty on individuals, families, and the state economy. And they're exploring different solutions, public policies, and practical strategies that help families to increase their economic security. In recent years, state asset building coalitions have emerged in over 40 states. This slide gives you some examples of coalitions that are underway across the country that offer opportunities for legislators to connect with their constituents, to build partnerships, and to leverage state programs and resources in tight budgetary times. State asset policy initiatives share several common goals. They're addressing barriers and creating opportunities for working families to save. They're expanding ways for families to access investment opportunities, and they're advancing measures to protect or preserve families' hard-earned assets. They share several common policy priorities. They're working to improve or expand access to financial education in our schools, our workplaces, and communities. They're connecting families to mainstream financial services through campaigns like Bank on California and Bank on Maine that actually help connect residents to financial services. They're working to raise or eliminate asset limits in public benefit programs or to exclude certain types of savings like retirement or education savings. And they're supporting match savings opportunities like individual development accounts, which are match savings accounts that encourage low-income individuals to save for investment in a home, business, or higher education. State initiatives are also working to capture the federal Earned Income Tax Credit refunds. The EITC is a refundable tax credit for low-income households. In recent years, several states have launched campaigns to ensure that as many families as possible are claiming their federal refund. And many states have implemented a state EITC, again, to maximize the amount of federal resources that are coming back to states to help families and communities. Other common savings policies include supporting families to save for higher education through 529 accounts or college savings bonds, supporting match savings accounts for children through demonstration projects or public policy, and enabling households to deposit a portion of their tax refund directly into a savings account or savings bond. Finally, a newer approach are prize-linked savings accounts, which are savings products that offer potential savers the chance to win a large prize based on the value of their deposits. State leaders have also been advancing policies that increase access to safe and affordable investment opportunities. For example, many states help low-wealth entrepreneurs to build business equity through support for microenterprise development organizations. Others are supporting homeownership programs and initiatives that ensure residents have access to safe and affordable lending products. Finally, states are advancing policies to preserve wealth in households and communities. To date, 2.5 million foreclosures have depleted the assets of working families across the country, and the crisis is far from over. State leaders have played and continue to play a leadership role in preventing or mitigating foreclosures and helping to stabilize neighborhoods in distress. Furthermore, states are advancing legislation to preserve households' assets by reducing fees and interest rates on payday and auto title loans and by maximizing access to health, home, and auto insurance. This slide gives you examples of policies that have passed in multiple states in the past 5 years. So why now? We all know budgets are tight, and even programs that are enabling families to get by day to day are being cut. But now more than ever, working families need access to opportunities to help them weather the downturn and to rebuild their financial security. If anything, the economic crisis has shown us that all families need access to financial education to be able to navigate an ever-changing financial marketplace. Families need access to credit counseling to address unmanageable debt loads and reestablish a strong credit record. They need access to bank accounts and low-cost financial services to reduce their transaction costs and access savings vehicles. And they need access to loan products that don't put them in jeopardy of losing a lifetime of savings if they buy a home or start a business. This slide gives you examples of a number of national resources that can help you learn more about asset building policy and practice. So in closing, I'd like to emphasize that state policies that support working families to save, invest, and preserve financial assets are crucial to their economic security and the health of our economy. In short, by helping people to help themselves, asset building policies build prosperity for all. Thank you.
Thank you, Heather. It's always a pleasure. Thank you for watching NCSL's video briefing on asset building. We hope that you have found this presentation informative. For more information about ways for working families to build financial security, please visit the project website that's displayed before you now. NCSL is interested in your feedback. Please take part in our satisfaction survey. For the National Conference of State Legislatures, this is Mary Fairchild. Thank you for watching this video presentation. Thanks.
Hi, this is Mary Fairchild with NCSL in Denver. Thank you very much for joining us. We now turn to the audio portion of our program. Heather McCulloch is on the line from her office in California. We have presented a lot of information about specific policies and programs in the video portion of today's webinar. Each has advantages and disadvantages and must be weighed in light of other state policy and budget priorities. NCSL is available year-round to provide legislators and legislative staff with additional information about policies on all subject areas. We will now open it up for your questions and comments. Simply type a question or comment in the chat box. We want to talk with as many of you as possible. If we are unable to answer your questions in full, NCSL staff will contact you following the webinar to provide additional information. So, do we have any questions? Heather, I have a question for you. In the broadcast, you mentioned the program Bank On. Can you talk a little bit, tell us a little bit about what that is and why there's a need for the Bank On program?
Sure. So as many of you know, there are up to 20% of U.S. households who are unbanked, and that equals about 22 million households. There's also about 19% of households who are underbanked, meaning they have bank accounts, but they're still using fringe financial services such as payday lenders, check cashers, and other high-cost services. So it was about 3 or 4 years ago, the mayor and treasurer of San Francisco initiated this concept of Bank On and called it Bank On San Francisco, came together with banks, regulators, nonprofits, and other stakeholders in the San Francisco Bay Area to try to, with the goal of banking 10,000 of San Francisco's unbanked families. And that, with the data and research had shown that there were a large number of unbanked families and that 1 out of every 2 Latino and African American families don't have bank accounts. The reason it's so important to get families banked is that that's really their access point to financial services. Families that don't have bank accounts are walking around with cash when they're paid. They're very susceptible to crime, and they don't have access to initial savings and lending opportunities. So they kicked off this initiative in San Francisco. They now have banked over 50,000 families, and I think it's actually coming close to 75 to 100,000. It's been picking up steam very quickly, and a couple years ago, the governor decided to replicate the model statewide, so we started a Bank On California initiative, and now there are Bank On initiatives in cities and states all over the country. So it's a really exciting example, and there's for more information, folks can just check out joinbankon.org, which is a comprehensive resource on Bank On campaigns.
Thank you, Heather. I'd like to add that Maine, and I believe a few other states as well, have introduced legislation to create bank-on programs. And for any of you that are interested, please contact me at NCSL. Heather, we have a second question, and the question is, how do IDAs work? Who provides the match, and are they tax preference?
Yes, so a quick background in IDAs. So they were first set up about 15 years ago, and typically they're set up by nonprofit organizations, and what they are, again, is that they're match savings accounts. So they were established really as a model, or based on the model of an IRA account, and it was when they were first started, they were folks were trying to show that, or to test whether low-income families could save if they were given appropriate incentives. So they're structured typically with a 2-to-1 match. Typically, they're housed at a nonprofit, and that means that nonprofit has contacts in the community, is reaching out to folks in the community, and is really getting the word out to low-income families that really are interested in and really need savings opportunities. They're typically matched by with federal funding. The IDA programs may vary, but if they're matched with federal funding, then families can save for a home, business, or higher education. And then states across the country have also provided matches and set up various ways that states support IDA programs. And there's a lot of information on the roles that states can play on NCSL's website. And then the last question in terms of are they tax preference, and the answer is no, it's not at this time.
This is Mary. I'd like to add just a couple of comments. There are some states that have really been innovative with IDAs, with match savings accounts. And a couple of examples exist in Washington, for instance. The legislature established an individual development account, match savings account for foster care children. So when they age out of foster care at 18, they have a little bit of money to invest in a computer or a car or to go to school. One of the more creative ideas I've ever heard of is the legislature in Iowa adopted match savings accounts for victims of the flood a couple of years ago. Just very unusual. So there's a lot of different ways you can approach this. Then there are at least 2 other states, Oregon and Kansas, where the match is a tax credit, actually, from a private individual or a company, and they don't rely on, at least these certain individual accounts don't rely on any government funds. So it's a great way to involve the community in providing opportunities for low-income households, again, to save for a home, an education, or to start a business. Okay. Heather, could you provide some examples of low or no-cost asset building policies?
Yeah. So there's a lot of rich examples in states around the country, and your question is particularly relevant now, Mary, because the asset building movement's been around for a while, but the states are in tough times right now. Folks have been really creative in terms of helping working families to save, and especially now, given that this is the time when they really need these opportunities. So, a couple examples. One I mentioned already is our bank-on campaigns, and they tend to be low cost because they're really about partnerships. They're leveraging different types of resources. In the California example that I gave you, the private sector came in many ways to provide pro bono services to support the campaigns, and the city really, they use their bully pulpit and their role as cheerleaders. So there wasn't a huge cost to it, and this is true as well for the state level Bank on California campaign. Other examples, though, are state leaders can support EITC outreach. So it can be as cheap as, contacting the media and getting out there and really talking to taxpayers about the opportunity to participate in VITA programs and to get families to collect the EITC. And different examples include maybe stepping up and creating a caucus within, it could be a bipartisan caucus where you meet regularly just to talk about different strategies. It could be informal, it could be formal. But again, costs don't tend to be high, and it's really a way to educate other legislators about different opportunities. And there's so much information online right now about what states can do. One smaller subset of resources was listed in my presentation, but you can even go onto any of those, pull down examples of policies and ideas, and use those to just talk to your fellow legislators about ways to advance these different strategies. Another thing that we've seen in states and regions, as well as cities around the country, is legislators can play a role in getting funders, foundations to come together and talk about these strategies as a way to try to bring resources into the state and or into the communities that you represent. So I think the work that Jeannie Darnielle did in Washington State is really an example of that. She pulled together so many stakeholders, got the conversation going in Pierce County, and then really took that conversation back to the state level to engage her colleagues in the idea of asset building and really in helping folks to understand the data, how severe the issues are, and to come up with really innovative solutions. So those are just some examples, but I think there's a ton of room for creativity, and it doesn't cost a lot of money to just start moving some of these ideas forward.
Thank you, Heather. This is Mary. Just a couple of other thoughts. Iowa created the Successful Families Caucus, and I think they had, 30 members or so within their legislature, and they were able to leverage money from the Northwest Area Foundation to take a good in-depth look at the issues facing working families in their state. They have passed a lot of the recommendations that they made in their final report. But again, it didn't really cost any taxpayer money to do that. They were able to leverage some private dollars. In Washington State, there's a Working Families Caucus, and it's informal within the legislature. They do not have any professional staff, so to speak, but they meet regularly. And the purpose of this caucus is to talk across committees, to talk about, what's happening for working families in Washington, but it's not just under the jurisdiction of the Labor Committee, for example. They're also looking at health care and trying to communicate and coordinate across legislative committees. I have a couple of just additional thoughts in terms of what legislators can do. I think, first of all, it's important to find out what policies and programs are in place in your district and your state. Contact your local or state asset building coalition, if you have one, and reach out to the private sector, especially financial institutions, for information and support. NCSL has many examples of legislative action, ranging from sponsoring legislation to getting involved with the state or local bank or credit union to establish incentives in local communities. I think, as I started to mention earlier, it's important to reach out to lawmakers on different committees. This isn't just a human services issue or a labor issue. For example, the education committee or education committee members may have ideas about, offerings for financial education in the schools, reaching out to members who serve on banking committees to investigate different savings opportunities that may or may not be in place. I think it's important to talk with private companies to find out what they are doing. There's a lot of action in the private sector. Talk with your members of your human services committees to find out, if existing policies and programs encourage those on public assistance to develop money management skills. And find out what incentives are in place to encourage small business development. We often forget that most people who start a business do not have substantial cash resources. The most important thing, really, I think a legislator can do is view financial security as a final product. It really isn't just a government program. It's an outcome. So it's important to ask yourself as a legislator, what does your state want to achieve? What does economic security look like? What is the role for the private sector and community-based organizations? And what is the role of government? I don't see that we have any other questions, so let me make a few closing comments. And bear with me for a sec. Okay. This brings us to the conclusion of this webcast. As a reminder, for more information about asset building policy, please contact me at NCSL. You may also wish to visit our website at www.ncsl.org/working families and read our recent legislative brief, Helping Working Families Build Financial Security. Information about legislative action and interviews with state lawmakers can also be found on this website. We look forward to your input about today's program and encourage you to complete and return the survey that you will receive by email. This presentation will be archived and available on the NCSL website. On behalf of the National Conference of State Legislatures, we want to thank you for your interest and participation today. We extend special recognition and thanks to the Charles Stewart Mott Foundation for its support of today's broadcast. Thanks very much. From NCSL, we'll sign off. Look forward to working with you in the future.